Thank you very much, Nicolas. As you have seen here already, we will start now with our panel discussion. And as Nicolas has already started with his presentation, I don't have to introduce you again. Please welcome with me our other distinguished panelists. We have already seen Vilhjálmur Bjarnason. He's an economist and associate professor at the University of Iceland and columnist, as we heard prior. Please come to the stage. Will, a warm applause, please. We have Magnús Harðarson. He is the CEO of Nasdaq Iceland and economist as well. He is since Nasdaq since more than 20 years, so he has a quite good experience, and from education, he's an economist as well. And last but not least, Mr. Daði Kristófersson. He is, maybe everybody from Iceland here right now knows him. He is the current Minister of Finance and Economic Affairs since 2024 and member of the parliament and also economist at the University of Iceland. So warm welcome. So we had already a lot of things. We heard a lot of things from the presentations of you both and of Ola. And to bring all this together is now a little bit our task. To be honest, we cannot bring all together. It's so complicated. Even the ECB cannot manage inflation. So why can we manage inflation? When it comes to taxation, it's an unknown study course. So we will not enter into every detail of taxation, especially when it comes to cross-border taxation or multiple layers of cross-border unfair treatment. But we will try to touch all these points in a way, as well as the mentioned topics of Nicolas from the OECD perspective. So let me jump into. I will take a seat now. To sit for the next hour is maybe too much. I will start with you, Will. First question: when it comes to real returns and the inflation, from your academic and investor perspective, over the last several decades, how have you seen the relationship between taxation and household saving behavior evolve? And what should policymakers learn from that experience?
Well, this taxation, well, yes, we have had taxation like that since 2018, and we have had increased taxation from 10% up to 22 from 1994, I believe. So the tax rate has never been revised on the experience of inflation. It's only on the experience of needs of the treasury. And we must adjust the taxation rate to the inflation. I know that calculations could be complicated, but if you never look at the problem, then we have the problem. And we lost quite a lot of personal savings in 2008, and we have had all kinds of taxation since that. It has risen from 10% to 22 since 2009, and we must look at the problem. And when I have tried to visit Minister of Finance, not him, only ones, but others, they have just closed their heads, and it has been too complicated for them, and it's better to continue on the nonsense.
So many investors argue that inflationary gains are taxed as if they are real gain.
There is no inflationary gain. It's inflationary adjustment. There is no gain of inflation.
No, of course. But should tax system distinguish between nominal and real investment returns?
Yes, that is.
So that means, let's make an example. You have shown the inflation rate.
Yes.
In the last
4
years.
26 years.
So the tax rate in Iceland should be adjusted maybe then by 10% because the inflation rate was so high in 23.
Yes.
Okay. Magnús, coming to you from your perspective of capital markets and market infrastructure. The stock exchange, how important for you is the tax policy and the behaving of households in the capital markets?
I think it's hugely important, actually, and I never tire of speaking about our colleagues in Sweden, because we, of course, have Nasdaq has an exchange there as well as here in Iceland, so we are intimately familiar with how things work there and the benefits of the ISK accounts there. We've seen retail participations, we've seen listings grow, we've seen capital being raised, we've seen their growth market grow at an astounding rate. 150 companies have transferred from the growth market to their main market. So it's been a tremendous success. So I think that's really important. I think actually, I mean, there are various aspects that matter here. One is, that, we need to have some tax incentives, I would say. Yes, that they're definitely a part of the picture. It also matters how the tax incentives are designed. I like the way they're designed in Sweden, in that, yes, they're simple too. They're simple, but they're also, they incentivize some risk taking. For instance, it makes no sense for you to hold, say, your bank deposits in an ISK account or treasury bonds, because you will pay more taxes than if you don't. So this is really means to direct investments into risk capital, shares mostly, but also some investment funds. So I think that's really important.
Thank you. Coming to tax policies and to tax complexity, the regulatory framework is quite important, and the international taxation. When I see the European landscape and all the borders between it, it's a very complex situation. Every country has its own tax goodie when it comes to this, its own tax system, and there is no intention of having a common tax base. There are always quite some ideas to that, especially from the OECD point of view, but it's not going to harmonize yet, and it will take a lot of time, I think. Nicolas, from your point of view on OECD perspective, across the OECD countries, what are the most important trends in taxation of savings and investment today?
I mentioned this during the presentation. There is really a move towards indeed having a tax advantage savings account. We also, Alexandra described this very well. We have indeed the ISK in Sweden, which is very well known, but also the ISA in the UK, the TFSA, in Canada. So this is gaining traction. This is gaining momentum. There is really this understanding that simplicity is absolutely key in shaping precisely retail participation in capital markets, and this is very much across the board in OECD countries. There are even some OECD countries that are sensitive to this issue of inflation. I think it's in Colombia, where in fact only the real interest rate is actually taxed and not the nominal interest rate. So to precisely...
Real interest rate is really the income. Inflation premium is only adjustment.
Yep. So precisely, they're subtracting the inflation erosion from the interest rate to tax tax the real interest rate perceived by the saver. So there is some also innovation in that.
You will not bring me to the point to invest in Colombia.
There are different issues then. So that's one common trend. Maybe just one point on the ISK, because it's often seen also as a sort of magic recipe, particularly in the conversation.
We will come to this later, by the way.
So I don't want to.
But so when I come back to your summary, you see that the Swedish model is the role model when it comes to fair tax treatment and
fair and effective.
Effective.
Yes, absolutely. With some caveats.
Okay. Daði.
Yeah.
Governments needs tax revenues.
Yeah.
But they also want the citizens to save and invest. How do you balance these objectives in practice?
Not very well, as Vilhjálmur has already gone through, and we have met, and of course we know each other from the university, and I do agree that the system we have has a tendency to impose a very high tax on real returns in years of high inflation. This is clear, but also, as it's kind of been pointed out, adjusting for inflation is not simple. I agree with Vilhjálmur. It needs to be done if your tax rate is going to be very high. But as this system was initially thought, the tax rate was supposed to be low enough not to make this prohibitive in normal years. Of course, this kind of boils or comes down to the same points as Nicolas was making in his speech. When financial literacy is limited, and the normal Icelander doesn't really differentiate between nominal and real returns, he looks at taxes and thinks, well, here's a group of rich people that pay 22%, and I'm a poor worker, I pay 36%. This is unfair. Now explaining why this is not really the case, requires at least 15 minutes, given that you have undivided attention of whoever you're talking to, and given that he understands your arguments, which is not necessarily the case. So I think we have ended up with this system because those that understand its limitations are not really able to convey to the rest of the public what the problem is, because the rest of the public doesn't really understand it. This is unfortunate. It is clear that what we want is a system where we have an incentive to save and invest. And you only have to look at the savings rate in Iceland to see that this has to a large extent been relatively successful. At the same time, we see a very limited participation in, for example, among the public in the stock market, which is very unfortunate. Now, there is a certain contradiction. Nicolas went through this also. Why would a tax incentive change behavior if people are systematically choosing to lose money by choosing investment that have in the long run lower returns? Because, well, if you don't understand the difference in returns, why on earth would an incentive change anything? But I certainly, I mean, Magnús can corroborate. He's met with me as well more than once. We are interested in looking into something like the ISK model from Sweden. Unfortunately, I don't really have any money to spare at the moment, but we are certainly positive.
I heard this before from ministers. So do you have a clear strategy when it comes to tax policy to strengthen the retirement preparedness and the financial long-term security?
Yeah, I think when it comes to I see Þórey there from the Icelandic from the Association of Icelandic Pension Funds. When it comes to preparedness for retirement, there are very few countries that are in a better position already than Iceland is, with very large retirement savings in the funds. And I think the entire system is a very successful one. Now, is there a benefit from an even increased savings rate? I think that is an entirely empirical question. But certainly, I think with respect to, for example, efficient pricing in the stock market, we would like to see the market deeper than it already is. And that also maybe comes back to a question like, is it good for a system, for a financial system, to be dominated by relatively few pension funds? I think one of the things we would like to see is more foreign investment in our financial markets in general, and more than foreign investment of the pension funds in return. That is less domestic, more foreign. Because I definitely do think we have challenges when it comes to the depth of these markets, and especially to the levels of investors willing to be speculative, because we need speculative investments. We have a lack of speculative investment.
May I follow briefly up on this? First, I mean, I think we have a very good dialogue on these matters, and I think that's really important. It may not need to cost anything, because these investors
I really like that part of your argument. I've already viewed that in our meeting.
Listening closely. No, because these investors there might not be any tax revenues in any case if these incentives are not given. So I think that is an important part. I think retail also, if we are talking about foreign investors, that the presence of retail, and I hear this from our colleagues in the Nordics and from markets that are more advanced, that the presence of retail and the liquidity really attracts foreign investors. So it's like a virtuous circle. You know, it's good for everybody. It's good for retail in the end. It's good for the pension funds. It's good for the foreign investors. It's good for everyone. Good for economic growth.
I have to warn you a little bit from our experience in our local market in Austria. The most of the trade on the local stock exchange is coming from foreign investors, about 80%.
Yes.
And so the stock prices and all the liquidity is coming from abroad, and that makes a huge impact and dependency on the foreign markets. So you have not really then the control in your hands.
No, we have the same situation in the other Nordics, where like foreign financial institutions account for maybe 70-75% of the trading. Some of this, though, is actually local investors trading through the foreign institutions. It is true there is dependence there, but they would not come if retail wasn't, you know, present in the market, for sure. Yeah.
I think also it's important, and I completely agree with the way Nicolas addressed the issue. Who is financing the investment in the US, the innovation in the US? It's us. I mean, we are providing them with the money through their markets. So why is it a bad thing that foreigners want to invest in your companies? I really don't see that. I mean, in terms of control, yeah, but it's spreading of risk, and, you know, the globalization of you know, investment is a good thing, just as the globalization of you know, all sorts of production is a good thing.
Coming to the next topic, the fairness and the consistency across jurisdictions. Similar savings and investment products receive different tax treatments across all OECD countries, I think. Is that fair or intelligent, Will? In the case for taxing long-term or short-term differently, what would be the fairest approach in your opinion?
I don't know what is the difference between fair and intelligent, but if we see some errors in the system, we have to fix it, and we can. It's impossible to have. It's probably impossible to have the same tax policy all over Europe. And it's not the same tax policy within the United States, even so, yes. And as I have said many times, we cannot accept the problem as a solution. We have to fix the problem and find some fair solution, so we have a similar tax on financial income as in on salaries. That is something which we can repair. And if we have another problem, which has been described here, which is financial illiteracy, both the Minister of Finance as OECD has mentioned illiteracy, and we cannot accept that. And we have to have some proposal for solution of the problem based on our literacy in financial affairs.
Do you have an example where you feel unfair treated, like salaries?
I had the example here where all the return was confiscated by tax authorities, by the Ministry of Finance. If you have bank deposits, then you are just working for the Ministry of Finance, and that was not the purpose in the beginning.
And we thank you.
You know that if you have the same tax rate for all income classes, you know what the government is doing. I don't.
Yeah,
they just the tax base will change then.
You have to take into the calculation things like inflation and come to some fair percentage which is not taxing the inflation. That is all things I have mentioned, and also we must compile through the taxation of pension income of individuals in Iceland.
Magnús, do you see tax treatments influencing whether capital flows into listed companies, private equity, real estate, or foreign assets?
I'm not sure I see a big influence of that here. I mean, I would be worried if we had the wealth tax, which was here for a few years after the financial collapse. I think that would, fortunately, that was abolished because such taxes can, or well, yes, abolished by law at the beginning.
Happy you.
Yeah, because I mean, I think that really skews the landscape when it comes to the, the assessment of, well, asset valuation basically, and leads to very strange and uneven and unfair tax treatment. But I don't see this as much. I mean, there are, when it comes to yes, no, I would, it's not I don't see it as a big problem here in Iceland. No.
Do you see withholding tax complexities having an impact on
yes,
cross-border or
to some extent, including when it comes to investments into Iceland? Minister of Finance is actually doing something about that. I'm not sure well, I'm going to say when, not if, when that's going to be passed, or has it been? Not yet, no. Which makes foreign investors exempt when it comes to capital gains tax. I think that's going to help a lot because these complexities were, of course, always important, particularly troublesome when it comes to smaller countries. And then, I mean, talking about complexities, of course, we have our own complexities just when it comes to filling out our tax returns. But you know that it would be, I think, very, very beneficial if that could be changed.
I have seen the initiative of 50 days. Oh, that would be nice. Yeah, 50 days to get a tax return cross-border. I think that's impossible so far. As far as I see on cross-border situations inside Europe, you can wait a year or two to get your money back. But 50 days is a good initiative. You can try. Yeah. Coming to the savings account, we already discussed the Swedish model. The EU Commission is working on it. The German government has renewed their system. But as a market standard, let's think about the Swedish model. Daði, international competition for capital is increasing. How can countries like Iceland remain attractive for investment without entering a race to the bottom in taxation and having such schemes like the Icelandic, the Swedish model?
Yeah, too many Icelanders in the room for me to give an honest answer here, because it has to do with our own currency, which is in itself a significant problem. Unfortunately, given the size of the market, the complexity of having to take into account a currency with, let's say, a mixed history when it comes to stability over time, I think is a significant problem. Now, of course, there are tools to alleviate that, but currently the central bank has set such limits on the application of such tools that they are basically non-existent. So this is by far our biggest problem. And I kind of agree with Magnús. It's not really the problem that the tax code is so complicated. I have already admitted that we should only be taxing real returns, not nominal returns. So I know that as a problem. But I do think maybe I'm allowed to be a little bit on a different point than Magnús with respect to the complexity for individuals of holding shares with respect to filling it into their tax return. I think it would help if the tax authorities would simply get access to data and pre-fill tax returns with respect to all these figures. Normal people are not going to be able to do that without making mistakes. That's for sure. When it comes to international, I think, or improving the access of foreigners to Icelandic capital markets, and if I'm not allowed to badmouth the krona anymore, I think it has more to do with maintaining the simplicity of the system, but our system is relatively simple. And of course, avoiding double taxation, which we are already working on.
The withholding tax system, I think in most of the countries in Europe, is quite simple, that the banks calculate the tax and transfer it. So there's no tax filing anymore. It's excluded from the...
But this is for, deposits, holdings like that. When it comes to stocks, it's more complicated. And that is what I mean when I say I think the data already exists in the systems of, for example, the stock exchange. It would be much easier if this was simply pre-read into the tax returns instead of individuals having to fill it out.
Nicolas, from an OECD perspective, what are the key policy guidelines for improving the design of financial incentives, for instance, for retirement systems? You spoke about it.
Well, the first thing is that it should really, I mean, the main goal of those incentives is really to foster enrollment in asset-backed pension systems. So from that perspective, I presented several models. A number of OECD jurisdictions are going for TE, some others for EE or EET. I must say, from our perspective, really the best model is certainly the EET system, because this is the one that really provides the incentive for people to enroll in the system in the first place by exempting contributions. And also, if you think of in terms of the fiscal cost, so the foregone revenues, if you go for a TE system, of course, you're getting the tax revenues upfront, but the fiscal cost, it's a bit of a contingent liability, in fact. So you're deferring, in fact, the fiscal cost of this system. So we're really making the case for an EET system, both in terms of effectiveness for enrollment, but also keeping in mind the demographic structure and the fiscal cost of those incentives. From our perspective, this is what we would advocate for in terms of the structuring. And then the incentives, we have a recommendation. The OECD is a machine to issue recommendations, soft law that countries may follow or not. But we have a recommendation on the good design of financial incentive. And of course, in that context, we are making a lot of emphasis on stability, predictability, simplicity. And there, I must say, what we see, I mentioned that during my presentation, is that if you look at OECD jurisdictions, you have a lot of diversity still. So we can go for much more simplicity in terms of organizing those financial incentives.
Do you would transfer this to the pension system as well? Not only for the savings account and for an entire pension system, the same learnings, or?
Yes, absolutely. No, it holds, I would say, first and foremost for the pension systems, indeed. And indeed, it can be broadened to savings accounts more generally.
Coming back to the capital markets perspective, Magnús, we already saw some figures from capital markets. What, in your experience, are the tax-related barriers that most commonly discourage companies from accessing public capital markets here in Iceland?
When it comes to tax barriers, I'm not sure that in Iceland we have faced that so much. When we had the wealth tax, the main owners that were listing companies were actually pension funds or pension fund-owned entities, which faced completely different tax treatment. So we got listings even during that time, but I think that would pose more of a problem if that was the case today. I don't think the tax system here it does actually discourage listings.
How is the IPO story developed in the last 5 years?
Well, it was at the beginning of the 5-year period, it was fine, but with higher inflation, higher interest rates, difficult market conditions, it's been poor in the sense that the companies have not pulled the trigger, but at the same time, it's a little bit like ever more cars stopping at the red light. The pipeline is I would say fairly long, and so when market conditions improve, I'm very optimistic about the future here. May I discuss financial literacy just because it seems to be a problem everywhere, and we talk about it year after year after year, and we sort of just are frustrated, but I think there is a really simple solution to increasing it quite drastically, and that's just by introducing it into the curriculum school curriculum from a very early age. And you don't need to understand Vilhjálmur's calculation maybe until you're a teenager, But you could understand all kinds of concepts, and you could, without making a single calculation, you can be equipped to avoid all kinds of pitfalls just by learning how to think and learn about concepts. So I think that's really important.
Will, do you want to add?
He mentioned.
Yeah.
Just would like to pick up on that because I think this is really an important point.
Dave.
Just to say that I completely agree with you, of course, and this is what the OECD is advocating for. But the first step is actually to measure financial literacy. I was mentioning this financial PISA survey. Actually, not all OECD countries as part of this financial PISA survey, only 20 of them. So there is still even a needy realization by all countries that financial education is important, that this type of PISA survey should be carried out largely and routinely. We are not even there. So that's the first step.
Well, I must continue on the financial literacy. One of the problems is that an idiot who promoted to become a professor in the Faculty of Sociology, he is now the main consultant of the Federation of Icelandic Unions. And the Icelandic unions are really fighting against the general public. And the rich people, they can fix their problems with assistance from auditors. But the general public, we have this resistance from the unions and the illiteracy of this professor, as he has nothing to do now except in his consultancy to the Icelandic unions. And the Ministry of Finance doesn't dare to fight against him.
Minister of Finance, please.
Well, that's unfair. But
that is the situation.
No. But I just want to pick up on the point that Magnús made. I do agree. I mean, what we need is more to interweave this into the education system. But I would like to say we have had a focus on STEM now for a long time in Iceland. It has resulted in absolutely nothing. And the problem is it is not the amount of time that is spent on STEM education, and in this case, I think it would apply to financial education, that is the problem. The problem is that the people that choose teaching, especially elementary teaching as a profession, have basically systematically chosen away from this kind of study throughout their entire career, and are therefore not good candidates to convey the importance and the excitement of, calculating compounded interest rates over time. You can see it in their eyes that this is not something they went to university for 5 years to do. So the way the countries that have done best in pushing up the status of STEM, and I think therefore probably would do best on financial literacy, are those that have emphasized on the education of the educators, making them become enthusiastic about the subject. Going through the motion will help no one. And all of us went to elementary school. You know that the teachers that obviously did not like the subject they were teaching you were not great teachers, regardless of their professional ability. They don't make you, light a fire in your soul. I want to learn more statistics, or whatever.
No, I couldn't agree more. I mean, that's the foundation. I mean, that's a necessary condition for it. It just struck me. When I read the government of Sweden published a report on the their capital markets journey in the spring of last year. And a sentence in that report struck me that one of the benefits they saw, of the ISK accounts and the other things that they are doing to promote retail participation is that the public learned by doing. And while that is of course great, I think it would be, and I applaud that as such, I think it would be very beneficial to learn by playing and simulating and learning before you learn by doing. Yeah.
I'm totally with you. I think the discussions on that educational level are quite similar to across Europe, that we cannot bring it into the schools, and we don't have the personnel to teach financial literacy. But this discussion is locked up for a couple of years now already, and the education of influencers and the internet is overtaking everything. And there we have basically no control what is taught to young people, and they educate themselves with cryptocurrencies or whatever. And maybe that's not the right way to do it, but they teach themselves, and that's one of the reasons why we have so many younger investors right now in Central Europe, at least.
Well, but I just there's one thing which reminds me of financial literacy. Probably the best investment I have seen in movies was in Forrest Gump, when he bought some stocks in a fruit company which was called Apple. And he made a good profit of this fruit company.
Before we come to the Q&A session, we are already in our last round. Looking to the future and taxation and the impact of investors' confidence, we already touched it a little bit. Nicolas, looking globally, what tax reform would have the greatest positive impact for capital formation, productivity, economic growth, and so on, from OECD perspective?
First of all, I think it was mentioned at the very start of the session, there is still the issue of double taxation of corporate profits. And this is a bit the elephant in the room. But in fact, if you look at most OECD jurisdictions, you still have this double taxation. So the taxation at the level of the entity and at the level of shareholders. There are very few OECD jurisdictions where this problem has been somehow tackled. If you look at Malta or Australia, they have an imputation system where indeed there is the possibility to claim a tax credit at the level of dividends. In Estonia, there is exemption, full exemption of dividends from taxation. But these are very, very few examples. So this issue of double taxation of corporate profits is still on the table. The second aspect is a more general debate on neutrality of taxation systems across different classes of assets. We published a study which is a bit old now, it's 2018, calculating, in fact, consolidating marginal effective tax rate for various asset classes. And what we show is that, first of all, there are very uneven levels. So we are far from neutrality, but of course, I mean, it can make sense. I mentioned pension savings. There can be departure from neutrality because there is a clear policy objective. But if you take bank accounts, in fact, bank accounts have among the highest marginal effective tax rates. And who is investing, who is leaving its savings in bank accounts? These are the lower earning households. So there is an issue of fairness there. Fairness and effectiveness also in terms of the general neutrality of the tax system. So these are issues that would need to be tackled going forward.
Daði, if you could change one aspect of the current tax treatment of savings, investments in Iceland, what would be your priority and why?
It's a very dangerous question because I have the authority to do it. So it's not like I can just say something and...
Take your alter ego.
Yeah, okay. I think it would be for a country as prone to long periods of high inflation, distinguishing between real and nominal returns and taxing only the real returns would be a very important step forward. I think it has two benefits. A, of course, it would resolve the issue of very unfair marginal taxation, as Nicolas was pointing out, is the case for especially the lowest yielding assets like bank accounts. But secondly, I think it would allow us to apply tax rates at the margin that would look to the public as being fair, even though it would probably give us a lower income in terms of tax revenue from the perspective of the Ministry of Finance. So this is a real issue when you're faced with long-term inflation.
Magnús, if policymakers wanted to strengthen the domestic capital market and broaden the investor participation, which tax reform would have the greatest impact in your view?
I think some version of savings and investment accounts would probably be the first one I would mention. Another one, which is not strictly speaking a tax question, but another measure that I think could be very effective would be letting pension fund members to allocate some of their investment, especially the supplementary pension savings themselves. I think that could also be very effective and has the benefit of not costing the treasury a dime, and secondly of not incentivizing more savings when we have enough savings. So it's just a matter of directing it a little bit differently, and because retail tends to invest, although retail invests a minority in like growth companies, they invest relatively more in growth companies and sort of these companies that we associate with boosting economic growth than the larger investors.
Will, last question to you. Looking 20 years ahead,
Yes.
what tax reform would have the most impact?
The Minister of Finance has already mentioned something on the bank deposits, but all kinds of incentives for investment for general people would give us a good result, so we could have better life in future, not only relying on the social insurance. And we in Iceland we had 2 times GDP in pension funds, so we are not so heavily relying on social benefits. And but I want to have private investment, not only this compulsory investment through pension funds. That is what I look forward to see, and all kinds of investment could help to do that. And I hope that the minister will speak more openly next time when he has a good chair.
First, we need to resolve the education issue.
Yeah,
people understand.
Yeah, but I hope that you understand the problem of the professors in sociology.
So thank you very much. I will open up the discussion now to the audience. I see one hand. Ola, please.
Alexandra Mączyńska, Better Finance. I very much agree with the minister on the point of the education. And in fact, it has been also a Better Finance position for quite a long time that we should have a very good education already at the young age, and financial mathematics and understanding and growing the compassion for compounding interest. But if we assume that we have people that are already quite excited about the possibility to invest. Of course, it's great for them to have simple tools and tools to invest. And in many European countries, this is not the case. So they don't have those tools. And in fact, they don't invest. And as it was said, I understand that in Iceland, those that invest, they invest indirectly through pension funds. And I would imagine that it would be one of the goals to encourage the ones that don't invest directly to do it. And then, of course, ISK would be a great tool. And in the context of your answer that you don't have any money to spare, I would wonder that if in this case, an ISK should not be an ISA, so investment saving account, shouldn't be looked at rather as, you know, tax break and potential revenue loss, but rather as investment recruitment investment recruitment program. And why to worry immediately about the possible foregone tax revenues? For me, it's a bit like worrying about the cost of the open bar when nobody's yet at the party. So I'm wondering, and there are too many countries in Europe that do not have ISAs. So I would want to understand a bit more like what are stopping the Ministry of Finance to setting up ISAs in their jurisdictions. Thank you.
Yeah, it's a very good question, and I do agree. I will, however, say if I had, you know, 1,000 kroner for every idea I've heard, which is somewhere along the lines of, if you just spend money now, in the long run you will have enormous benefits, and if I implemented all of them and they all actually held water, the cost of running the Icelandic government would become negative in 5 years' time. But I'm not being difficult here. I do agree that this one is a good one. But the way you decide on budget allocations is that basically you take last year's budget, you add whatever marginal increase has been on the budget, basically because of economic growth, and then there's a fist fight or a knife fight or whatever type of fight within government about who gets the margin. So any discussion about anything that has any impact on the budget in the short run is a bloody one. And it requires there not to be a crisis in the ER, to put it bluntly, to be able to get it through. Because it is going to be cut either in the fist fight in government or in parliament. So this is the political reality. I mean, it is you know, public choice theory. It's a lesson in public choice theory to be Minister of Finance. Oh my God, the short-sightedness. And oh my God, the special interest, you know, impact. So I know all of these excuses are just that, excuses. I'm trying to explain to you why this hasn't been done. But I've been talking to Magnús several times, and we are figuring out a way to implement this, at least in steps. But you are right, but the reality is simply that, you know, it's every krona counts on the margin, especially when growth is low.
Please. Yes, thank you very much. Jose Esteves, Spanish Association. Yes, I thank you very much for the explanations you have exposed this afternoon. And we are talking about all the time about taxation and about inflation. But some consideration from my point of view, inflation is another kind of tax. I would say that inflation is the tax of the poor people. And I am really concerned with this situation in Europe. We don't have to forget that inflation caused the Second World in Germany. Germany is very sensible, and all Europe has to be very sensible with inflation. Inflation I repeat, it's not a joke. And we are trying to making policies overall. I'm not talking about Iceland, I'm talking about Europe, without taking in real consideration the problem of inflation. Many situations in Europe of poverty is taken because the state is much more and more large is much more, is almost a kind of monetary matching of recaudation, taking money from the people. And what about the people is saving all the life? And what about the people is investing in products as investors? I think the politician has to consider that seriously. It's just a thought, nothing more. Thank you.
Well, I would just like to say I agree. It is the most despicable type of theft, inflation. And there is one issue with respect to the, I think, demographic changes that we are going to see in the coming years, which would make me very worried about inflation expectations and inflation development in Europe, because well, we have done some things right, like the EET systems are definitely better because they do provide for the financing of at least some of the services we are going to demand. But at the same time, we should worry about, when we start to disinvest to finance retirement, what system is going to absorb these assets and at what prices, and who is going to provide the services that we require and at what prices. And both to me are a source of worry.
Next, please.
Mark DeMarco from Mars, Malta. You picked up a very complicated subject, taxation and inflation. But a point that I sort of gathered from all these presentation is the fact that there are so many different rules in different countries across Europe, at least, that is making it more difficult for any retail investor to think about it seriously. And we spoke about the problems that retail investors have to enter into the capital markets. Yeah, how can we attract more investors into the private market, into the capital markets, yeah, when there is so much to digest and to understand? So I was wondering, perhaps somebody like Nicolas from the OECD, yeah, what's keeping the EU and the authorities to at least harmonize the taxation on investment of listed companies in the European Union, like a single market tax for listed companies, so that the investor, whoever he is, and in whatever EU jurisdiction he invests, he always have the same harmonized taxation, which is simple and easy to calculate. Thank you.
Should I or you? Do you?
Well, that's I don't have an answer really, because that's I guess, first of all, much more of a political problem than an economic one. And from an OECD perspective, that's hard to say something that would have any value for the EU. So I would actually, I'm sorry, I don't want to to dodge the issue, but politically it's a bit sensitive for an OECD official to speak about what the EU should do. So I have also some constraints on that.
Maybe I can help you out. As we all know, the OECD has issued some guidelines all the time. So there is for instance, the very famous OECD model double tax treaty convention. So it's a model for a double tax treaty between two countries to avoid to tax one asset or one income source twice. That's the idea of a double taxation treaty, to avoid double taxation. So that means if one country has taxed it, maybe the other country where the individual shareholder has his residence, they will not tax it again. And there are different models how to calculate this. What do you mean with exemption method and credit method and so on? So this is the model more or less between all OECD member states, except countries which have very, very old double taxation treaties coming from the 100 years ago or something. These are frequently very good double tax treaties. So this is one approach. The other approach is coming from the OECD as well. It's 20 years old to say, okay, we cannot harmonize an entire tax scheme in the OECD countries, but what we can try is that we define a common tax base so that we are all talking about the same subjects on a base. What is income? What is an asset? And so on. So like we discuss what is a shareholder. Yeah. So there was the idea of the common tax base. And on top of that, you have different tax rates in every country so that you can really start calculating and comparing. But as far as I know, it was never implemented somewhere. Maybe only in some Benelux countries or something like that. There is it, but it was never brought accepted.
But the furthest that we went, and actually that we're trying to go, is with this global minimum tax that we are discussing as part of what we call the base erosion and profit shifting initiative. So first of all, this is on corporate tax, strictly speaking. It's not about savings, to be very clear. And even on this, there were two pillars under this BEPS program. The first one was about the reallocation of taxing rights to have the same rules, indeed. And this first pillar is blocked because there is no agreement between not only the OECD jurisdictions, but the 170 countries that are part of this BEPS agenda that cannot agree on the reallocation of taxing rights. And the second pillar, which is about having a global minimum tax, indeed having the same understanding of the tax base and the minimum taxation that should apply to that, with the possibility for countries to tax companies that would be under tax in their own jurisdictions, in their at the headquarters. This second pillar, we were close to achieve consensus on that, but it has been blocked in the last mile because in the US there was no bipartisan consensus around this global minimum tax in Congress, and certainly not with the current administration. So the best we could do was to achieve this side-by-side agreement at the last G7 under Canadian presidency. So this is where we are in terms of harmonization, but it's about the corporate taxation, properly speaking.
Arno, you. Oh, perfect. Helen, Gibraltar. We really need that.
Thank you.
Coming from tax haven.
Helen Gibbons from the UK Shareholders Association. Actually not speaking about Gibraltar, but speaking about the UK particularly this time. My colleague Martin White is watching the presentations and the panels from London at the moment and asked me to revert to the subject of financial education with you. And to mention that in the UK Shareholders Association, we have developed two websites focused on investor education, financial education, aimed at two particular cohorts of the population. And we, in our responses to consultations from the UK government on the matters of financial education, we've always emphasized that you'll never get the truth, the whole truth, and nothing but the truth on financial education if you exclude the financial industry from the creation of educational materials. I'm not sure whether the panel would concur. Thank you.
I would actually agree with this. And actually, the only initiative that I think of as relatively successful is the one the domestic banks in Iceland ran. So I definitely think that this is the way forward. I mean, let's be honest here. It's not like education on poisonous plants. It's an education on the foundations of investment. So I see absolutely nothing that should prevent exactly the companies within the market to be actively involved. I think the challenge is that the people that get a fire in their eyes when they talk about finance and financial education are so well paid that they would never consider spending time as elementary teachers.
Yeah, I would like to second that when it comes to the financial industry. Both like Finance Iceland has been going to the secondary schools, for instance, and then some of the banks have been have had programs that are geared towards adults, women in particular, for instance, Arion Bank. So, and the fact that they have been cooperating with the schools, I think is a very good sign.
Arlene, please.
Thank you. Coming from Romania, which experienced huge rates of inflation in the past 5 years, a total of more than 50% in the past 5 years, and seeing people being taxed 10% on what they're in fact losing because they're receiving 5% on average per year, and the rate of inflation is 10 or more than 10%. I'm very happy to hear a view of a Minister of Finance who is telling very clearly today that we should tax the real return, not the nominal return. That this is a very nice message. I'll go back with it to Romania and to some other member states who are experienced high rate of inflation, especially in the very eastern part of the European Union. And another point I would like to raise is about financial literacy, and to also mention the bad example of Romania, which in its national strategy for financial literacy defined just quantitative measurement of results. For instance, is the number of participants, the number of seminars, and the number of leaflets distributed on those seminars. And this is all. No qualitative measurement. And this is something also Nicolas mentioned, how to measure the real impact of the financial literacy programs, how to measure the gains of those who participate in it, who take part in those programs. Could, in this respect, the OECD, together maybe with the European Commission, prepare some methodologies, some recommendations also for the member states. And the second topic also in this subject, I've seen some very good examples on member states establishing national committees for financial literacy in which almost all stakeholders, including consumer organizations, academics, financial industry also, and ministries are represented to try to coordinate a bit all those programs, because if there are plenty of programs, some of them pure selling programs prepared by financial industry, and some other programs with contradictory messages one to the others, I really think that it could be great to try to coordinate a bit those efforts to provide real gains for those who are participating. Thank you so much.
So I think that was the last remark. And with this, I would like to deeply thank you for your participation in this very interesting and fruitful discussion. I think it's a warm applause